Good morning. It's
Good morning.
Ticker Highlight Show.
Good morning, everybody. Good afternoon to my friends on the East Coast. Good afternoon to my friends across the pond. I hope everybody's doing well. Happy Monday. I just want to start off by saying thank you again to everybody that attended our open house that we ran at Delta Strike. It was a huge success. We had nearly 400 people in there every single day. We closed a nice win on Thursday. Gonna close one for not so great today, and then another winner. So 2 out of 3, not too bad. Pretty happy with what we did in there. But more importantly, I got the opportunity to really explain the ethos of Delta Strike and what we're doing there, which is following big money flow, following order flow, trading with Morgan Stanley and Goldman and Merrill Lynch, and letting them do the research and us make the money. It is great. Now, we ran a very special offer during the open house. I'm here to announce that is still open. You can get 2 years for the price of one joining Delta Strike. That is open today. You have the opportunity to join. I would encourage you to do so. You can join all the fun and excitement that is Delta Strike. Folks, I am Mark Sebastian. I am your only option. I am the CEO and founder of Option.com. Today's ticker highlight show, we're each going to discuss a stock pick or two that we like, and we're going to look at the positives and negatives. We'll also look at a stock that we each don't like, and then at the end, we will come up with a trade. Should be a good time. And, again, we continue to be pretty darn good at this, at picking these winners. So, again, thank you for joining Ticker Highlight Show. So the first thing I'm going to do is run through the markets. Then we'll start looking at these individual stock picks. And as you can see, the S&P 500 is booming. It's up about 65 points. Call it about 1%, give or take a couple of points. The NASDAQ is up 1.4%. The Dow is up about 2/3%, and the Russell 2000 is breaking a new record today. It is up 0.8%. So across the board, markets like this China deal, potential China deal, right? I don't know what happens when we actually get a China deal, but in the near term, these rumors of a China deal continue to be very bullish for the market. I'm interested to see whether we get some continuation there if a deal is codified. But short term, they really do like the market. And you can see VIX has fallen back completely down to earth. It's where it was trading before October 10th happened, and is now at kind of the lows that we saw in October. I'm interested to see if order flows as such move VIX into the teens, but option prices continue to be inexpensive. VIX continues to be inexpensive. One of the things I have been hammering on is that all of this zero GTE order flow is absolutely crushing near-dated options. They continue to not be, in my opinion, expensive enough. And to my point, on Friday, we closed 67.90. If you bought the 67.90 calls and 67.90 puts, that's called a straddle. It is the market's best guess at how much we're going to move. It is the market's best guess of how much we are going to move between now and when that option expires. So on Friday, I was looking at the October 31st, so this Friday, the Halloween 67.90 straddle. That was where we closed on Friday. And so it's just a snapshot of how much does the market think we're going to move? And the market was pricing at about $97. So they were betting that by Friday, either up or down, the market would move $97 in total. We are up $66 today, 37 minutes into the session. The 67.90 calls are worth $92. Just the calls are basically worth what you'd have bought both the call and the put for. The calls themselves are worth $20. So that straddle is trading around, call it $112. It's like a 15% gain overnight on a trade that did not have any directional risk. So I'm going to be live for the Fed. We're working on doing stuff for earnings. There is so much going on this week. We have Google, Apple, Amazon on Wednesday. We also have the Federal Reserve. We have Apple and Amazon on Thursday. We have Exxon and Chevron on Friday, two big oil giants. And we still have this debt ceiling deal that could float around. We got a meeting in China. If we get a debt ceiling deal, there's going to be the BLS numbers. I mean, you could take this is a fire hose of news type of week in terms of how much you're getting. And yet, these options continue to be cheap. With that in mind, let's talk about this market and some of the individual names and what I see there. And I want to start off with the bad. Now, we all saw Intel's week last week. Intel is back to life, folks. It is back from the dead like a phoenix rising from the ashes. And it is for twofold. One, the investment from all these firms into Intel. But the more important part is not what they're investing. It is not the amount they're investing or the stake they're taking. It is what they're investing behind. And that is the foundry business. Intel has poured lots of money to losing causes for their foundry business. They finally look like they might be getting the chip business back to normal as well. But the foundry business is really where their growth is going to come from. And all that good is going to be bad for Taiwan Semiconductor. On last week, I started seeing some bearish put buys in Taiwan Semiconductor. Kind of raised my eyebrows because Taiwan Semiconductor has been one of the best stocks in the market. In the last 6 months, it's gone from 165 to 296. Good for what, 80%? But we're starting to see traders buy puts here. And it got me wondering why. Right? The famous they of Goldman, Morgan Stanley, that crew. Why are they buying puts? Is Intel's win Taiwan Semiconductor's gain? And yes, I know they're investing in the United States. But it just makes me wonder whether things have been a little overbaked here. All right, on the upside, we do have these earnings this week. So I don't want to trade this, but I want to point you to the two that I think are the most important. And it's not Apple and Microsoft and Meta. So that kind of gives it away. Amazon. I think Amazon has so much actual use of AI. Hans, what's your word for adoption? It's
inference.
Thank you, Hans. The poster boy for inference, the poster girl for inference, has to be Amazon. Their ability to use AI for logistics, for inside of their plants, for, hey, you just bought this, you're going to want to buy this too. Right now, I mean, we all have seen like the, hey, you like this, you might like this. AI is going to really improve that. There's so much inference for Amazon to do and they're in that stage, and they're going to be at the forefront. And they have investments in Claude, Anthropic. And Anthropic is probably the most interesting AI group when it comes to actual industrial use. Right? ChatGPT is the fun one that you use to, create images of Leisha doing skydiving. Right? I'm going to do that on ChatGPT or Grok. Right? Gemini is going to be the phone integration and what you're using in your spreadsheets along with Copilot. But Claude is going to be the one that is helping with logistics, with, actual industrial and retail use, which makes it the most interesting. I don't think Anthropic is publicly traded. I
just saw the craziest headline, Mark.
Yeah, what's that?
Qualcomm to launch next generation AI inference, Hans inference, optimized solution. Stock up 20. I like a move it in 5-point ticks.
The new word is recursive. Recursive is this new self-learning and all this stuff. This is like, you got to get on with you need the AI dictionary.
You know what, Hans? I think that's a good post for you. Get your AI dictionary here.
Yeah,
that's right.
I feel like Hans has like an app that he built that spits out words that I don't know, and he's intent to use them.
Recursive. I'm embarrassed to say, but I had to look it up. I'm like, what is he talking about? Oh, okay, it's self-learning. It's stuff I've been talking about for 8 years. It just means like neural networks or learning by learning and learning. Just
yes. So yeah, I like Amazon and Google. Like I said, Google has Gemini in your phone. It has Gemini in its Office suite, along with Copilot. But Google, the nice thing is Google owns the technology inside of Gemini, and Copilot is outsourced. So I think over the coming weeks and months and years, you're going to see these two jump ahead of the other groups in this pack. So those are the two that I find interesting. Speaking of interesting, let's bring it to our own recursive man himself. He is Hans Albrecht, the head of income trading here at Option Pit, the master of the turbo trade. You've got some interesting ones to look at this week, Hans. What's your one to love?
I love the Amazon one, actually. Maybe I'll just hop on your bus because they're cheap. They're cheap. Their gross margins are flying through the roof. If you look at the gross margins over the last 10 years and also robotics, they're starting to, sad to say, they're probably going to get rid of some people, but they're going to think of where margins are going as they replace more of the logistics process with even more automation. They kind of wrote the book on that, 13 years ago, and they're going to do even more of it. So, these are these little things that are happening out there that are really, that we talk about all the time, where, profit margins are going to respond to the efforts to use AI, to use inference, et cetera. And we're going to see that play out throughout the economy. So that's kind of, I think it's a great name for that. But for me, my one to love is actually Tesla, right? So I like it. It's an interesting name. People sort of think of it as a car company, and it's kind of like a little bit of like, everyone's looking over here and they kind of forget about the other stuff. Now they talk about Optimus and robotics and all that, and I think they're going to be a big influence there, big part of that story. But one thing that people don't talk about as much is the power side of things. And if you read into the earnings or listened to the call, they just crossed $1 billion in quarterly energy revenues in their energy business, right? So these guys are, Elon is a big believer in storage, of course, makes sense, right? You've got Tesla cars, you need good batteries, you need good storage. And so this is a company where, as you alluded to earlier, talking about there's not going to be enough power, there's not going to be enough actually, we talked about it earlier. There's not going to, there's not going to be enough energy. There's not going to be enough power around. We need all hands on deck for various sources of power. And Elon is going to be somebody who has the scale, who has the influence, who has the access to capital, who has et cetera, et cetera. So I think that's very interesting. They're already selling millions of these like mega packs and power walls and all that stuff. So I think that's almost like this, the energy flywheel within Tesla is this sort of little, almost hidden in the sense of what, the overall narrative is everyone gets upset that, they're not selling as many cars, and this really isn't a car company anymore. One to leave, I'm going to say just based on valuation. So I'm going to say Oklo. So I think nuclear is absolutely, no question, very, very important. But you have these companies that have sort of gone up 10 times. And I think it's going to take a little bit of time. Nuclear is rather slow. Modular takes a couple of years, but we'll see how that kind of plays out. But even if they get going, they have to grow into these valuations. So it's an area where I feel like, sometimes now when markets get a little bit, certain areas get frothy. I'm not saying all areas. You have to kind of recognize that valuation does kind of matter. It is a very story-driven market, but at some point, valuation does matter a little bit. And it's one piece of a very large energy puzzle that is extremely expensive right now. So I would say, probably one to just kind of watch for a better entry. And so that's my one to leave.
Yeah, I'm with you on Oklo. I like it a lot. I just feel like I'm with you. I think there are better names to take advantage that are maybe falling a little farther and faster. SMR looks more interesting to me than Oklo. NXC. I like it. I'm with you. I like it as a company. But from a valuation perspective, I think there are better names to play in.
And you know what? I got to hand it to Frank. I asked him one day, I said, you know what? I'm looking at SMR and Oklo. And he said, absolutely, Oklo, and it doubled. And SMR did okay, but it doubled. So Frank absolutely nailed it on that one. So it does seem to be kind of a favored name in that space, but,
Yeah. I mean, it has absolutely ripped, but it's probably at a place where it needs to take a breather. All right. Speaking of breathers, let's bring it to our own heavy breather with the axe. He is our own option trading woodsman, the only man that can build a 9-legged trade and a hen house at a hen house all on the same day. He is our director of education and the president here at Option Pit. He is Andrew T. Giovinazzi. Andrew, what do you got today?
Well, we have on the energy theme. I thought a company I liked, it was Frank Pick, Bloom Energy, a couple years ago, BE. And I like this as a short-term short. Why? Because it's got a little bit overbought. And I think, again, it does have revenue. It is growing. And alternative energy is part of my Flash theme. It was last year. It was also part of it at the beginning of Flash 5. So, things that help AI, that the market, that are more cyclical. Now, I had this last week. It did a little bit of a down dipper here, and now it's moved back up again. I still like it as just on a valuation. It should come off a little bit because all of these stocks, quantum computing, rare earth, all these names that just that were hot are starting to pull back somewhat. So again, I wouldn't spend a ton of money on a put and have a relatively tight stop. But I think these, like the quantum computings, some of the rare earths, all the stuff that is mooned, even some of the nuclear stocks, they're coming off a little bit. And I think money is going now, like toward the end of the year, into things that make money. That have the AI story. I'm going to build a new chip or something. Use one of Hans's awesome buzzwords there. So BE is my short, and for an energy long, we have earnings coming out this week. Mark, I don't know if you remember way back when we were young and more handsome, order flow. How did you discover order flow back in the day, right? A broker would come in, some guy like Nemo, and then he would say, we would ask, hey, Mark, is this the smart customer or is this the dumb customer? And he would say, this is a smart one, go buy some stock. So then we would go buy some stock, and then the guy would buy some calls, and then the stock would rip. That is where Mark's where big money flow comes from. So it actually, like, there are people that somehow know. I don't know how they know, but they know.
Andrew, that's just wrong. That is just
and they had the same, and they always went through the shadiest brokers. It's like, does it come to like the Schwab broker or the Payne Weber, like rarely, right?
Some boiler room, right? Some boiler room somewhere they were going through. It's funny. That reminds me of a story. I've told the story before where I said, people used to come in and, when I was market making, I traded a whole bunch of stocks that weren't very liquid. And so somebody would come in and buy like 5,000 calls, and then, it'd be a mining stock. And then, soon after there'd be a takeover or some sort of good news. And we were upset at first. And then we went, wait a minute, we love those orders because we are getting information. That is valuable information. So every time we saw something like come in, well, we'd make sure that we bought a whole bunch of stock or, found some calls to buy and played along with it, because there's nothing wrong with that as far as I'm concerned. If someone tips me off that something might be going on.
The worst was when the broker came in with a 500 lot, another 500 lot, another 500 lot. Sold him at 120, sold him at 160. How many did he have at $2? And then at 2.5, he wants to participate.
MLB.
That was the ultimate.
Shady.
Yeah. So, and folks, the point is that, traders have been using options that express their opinion for 30 years, 40 years. But it's just, now what makes our trading different is that options are their primary way of expressing opinions instead of the stock, because the option market is just so much more liquid and easier to get in out of than the stock, and it's cheaper. You don't have to put up so much margin buying stock. Traders, Morgan Stanley, Goldman Sachs, they've smartened up, and they're using options to, play these directional opinions when they know they're right. So, Andrew, your stock that you're jumping on with order flow is Apache.
Is Apache, right? So, like, this stock has been kind of, and here's the thing: the market has hated it. Whatever reason, that's the deal. But earnings have been good. They socking away cash, pay a good dividend. But also, you've seen more news opening up oil exploration, and I've also seen a lot of January call buying. So January 2026, January 2027 call buying over the last 2 weeks. This was a flash 5 stock of mine. I just had a decent trade in there, and I just rolled out of the stock and into calls. So I took all my money from the stock and levered 10 times, basically. So Apache is my pick. I think it'll be a $28 stock by the end of the year.
Yeah, I was noticing that you've got traders buying the January 25 calls, the January 2027 25 calls, 30 calls. There is kind of this long-term bull thesis in the order flow for, the order flow is another word for big money flow, another word for how Goldman and Morgan Stanley and Citigroup are expressing their opinion. But yeah, there is plenty of bullish paper in there. So, Andrew, thank you for that. Let's swing over to our Queen of the Candles, your queen and mine. She is the one, the only. She is Leisha J. Leslie. Leisha, what are you looking at this week?
Good morning, everyone. Well, not to tap myself on the back, but both my choices were right, but they're beyond. I called Q's at 621. They're trading 625. So there's room to go higher, but not sure we want to hop in there. I wrote it when they were down here, so they've already hit my target and then some. My short was Johnson & Johnson, the Dividend King, and it is also lower, hitting my support though. So a little, that move has already happened. So I was right on both of mine. Christian, A+ for me this week. Going over everyone else's choices. APA holding support here after the gap higher a couple days ago. As long as it holds that gap, and the 21-day, I think definitely could trade higher. Bloom Energy, it is up against resistance. I would rather go long APA than short that one.
I'm kind of where that is. I'm kind of on that mind right now too, Leisha.
Yeah, Oklo is up against resistance here. Kind of a wild one to short though.
Yeah,
I think. What was it? Amazon? Wait, what was your long, Hans? Amazon or no? Tesla. My favorite.
Tesla.
That's my favorite. I wrote
Exactly.
about it also over the weekend. I like Tesla higher for sure, and we could.
You know
do
what?
TSL.
They hammered it after earnings. They hammered it, and it came right back that day.
Wow. Super strong reversal. That's what I wrote about. Super strong reversal. Little pay.
You didn't kill that stock.
No, it's going to 5. It's going to 485 and then 500. And we could do TSL calls and there would be easier. That's my favorite. Mark, you had IBM and TSM, right?
yeah. IBM's the other one that, along with Amazon, that I think is really interesting.
It is. Look at those moves. Maybe you wait for it to take a breather here. Big moves already, and then hop in. The top of the pitchfork's 320.84. Like I said, I think I might wait on that. TSM also up against some resistance. You do have the 21-day support just below here. I'm bullish market overall, so I would much rather go long something.
Yeah, me too. Yeah, the TSM was what really caught my eye with that was a trader buying 10,000 of the 290 puts expiring in November. So right below where it's trading, they paid like over $12 for them. So that was just a no stock, no nothing. It was just an aggressively bearish play. I agree. I think that's a tough one to short. I think the whole market's tough to short. And folks, she's bringing up TSLL. So TSLL is the Direxodon daily 1.5 time bull share TSL. But what makes it easier is that it's only $21. And so, Tesla, if I go and buy a call for, even next Friday, the at the money call is $15. So you're throwing $1,500 at it. If I'm looking at TSL, then I can buy the 21 call for like $1.50 for November 7th. Heck, going out to regular November, the 21 calls are only $2.25. If Tesla, it goes on a nice bullish pop, this thing can really move, right? It can, if Tesla makes it to 500, that'd be about a 20% move. That would mean a 30% move in TSLL.
You're talking
So you'd be talking
23.65 and then 25 almost.
Mm-hmm. So that would be a really nice move. I think it's an inexpensive way to play Leisha's idea.
Hans's idea.
Hans's idea, excuse me.
Only if it works out. If it doesn't work out, it's Leisha's idea.
So I'm actually gonna meet in the middle here. We can buy the November 14th 21 calls. They're gonna be less than $2. And we got to move up to $23, $24. Those are gonna be a real real nice win. And I'm with Leisha and Hans. I like the Tesla play. So we're going to look at the TSLL. That's the Direxodon Daily Tesla Bull 1.5 share ETF. And I'm looking to pay less than $1.95. I'm going to type this into chat here. And
you know what, Mark?
In our tracker. What's up?
The option prices, like, they're not that bad. They're not that bad on in the Tesla space on TSLL. So that's I like it.
Yeah, absolutely. And yeah, they're not bad.
I believe the trade is coming across soon. We can't.
I am writing it right now. My goodness.
Because if you look around, pricing has kind of pushed up a little bit around, and that's one of the areas. IWM is another area. There's sort of some areas that where the pricing is actually a little bit reasonable. It's not ready for that explosive move, which is what we're playing for.
And then I thought I told everyone I was closing Amazon.
I closed it when it was trading like almost $10. I think because I know I was gone Friday, so I wasn't going to be here.
When are those earnings, Mark? Those are on the.
I did. I got, an instant sell. Thank you. If you missed the Amazon sell, you've got a really nice opportunity now. We're talking about these Amazon 220 calls that are, $11.50. So you're going to be a happy camper on those calls. So folks, I have posted the trade below here. You can see it there. And then you can join us in this trade if you so feel. Once again, I just want to remind, we're offering 2 years for the price of one in Delta Strike. Follow that order flow that we were talking about in the show today, and meet with me every single day behind closed doors in our meeting room, and join our amazing chat. So for Hans Albrecht, our Director of Income Trading, Peter T. Giovinazzi, T for Too Much Fun, our Director of Education, Leisha J. Leslie, Queen of the Candles, and Head of Technical Analysis here at Options. I am Mark Sebastian. I am your only option. Have a great trading week.
See you, folks.